In this tutorial, I'm going to show you how I use Lux Algo to make money in the stock market, and be sure to check the description of this video for more information on the Lux Algo software, and we're starting right now. So there's two indicators I'm using from the Lux Algo suite. This is the premium indicators, and you can, once you're in TradingView, and if you already have Lux Algo, you can come in here and add Lux Algo Premium and Lux Oscillator Premium. Those are the two that we're going to see on the chart, and we're going to go through all the details here. So on the top we have the Lux Algo Premium, and on the bottom we have the Lux Oscillator. So let's really quick go into the settings and see what we're seeing, and then we'll talk through what each one of these things do. So there's two main things I'm using on the Lux Algo Premium, which is on the price chart, and I am using the autopilot confirmation. This is kind of a setting signal, and I have my autopilot frequency set to short term. And what this is going to do is sort of dictate the speed of which the trend that it's looking for with the various candles. And you can play around with this. I like short term myself because I like catching short term moves. The second thing I have on here is I'm using the candle coloring mode confirmation gradient. We'll talk about that in a second. And I'm using the candle mode Taki Ashi. And this is a second set of candles that are kind of like Taki Ashi. And we're going to talk through everything, but I just want you to see the settings first. So first thing I'm going to do, I'm going to take off the Taki Ashi so that we can just look at the price chart. So this is with candle coloring mode gradient. And in general, what Lux Algo is doing is trying to give you what the trend is doing according to its algorithm of price. And we can see that, you know, it's pretty basic, right? And this is partly why I like it. Red means you're in some sort of downtrend, and purple, bluish is typically some kind of retracement. So in a downtrend, it'll start to turn purple, blue, and then eventually turn green when it goes back up. Or in a downtrend, it could start to turn purple and blue here, and then it turns red to continuation. So purple and blue is kind of like something could happen, something could keep going. And if we go, let me find an uptrend somewhere, and it's been difficult lately. This is a 5-minute chart, by the way. Let me zoom in here. So this is kind of an example of what an uptrend would look like. You have green candles moving up, and they start to turn, you know, a different color green, eventually back to purple. So purple's kind of this mid-range between green and red. Now, I personally like the gradient, and you'll see why in a minute. It kind of just, it fits in with everything else. You can alter this to be confirmation simple, and just so you can see what that looks like. And, you know, to me, it's red and then it's purple, and there's not enough nuance for me, and so I kind of like the gradient mode. So let me turn that back on. Confirmation gradient. The second thing, and this is I think one of the coolest things about Lux that I really like, and I've been using a lot since they added it, is the Taki Ashi candles. Taki Ashi is very similar. I wouldn't say very similar. It's somewhat similar to Taki Ashi in a sense, and what I'm going to do is take off the price, and this is the additional Taki Ashi candles. So what I like about this is they're also color coded in the same way. So when your candle starts to turn green, you also want to see some sort of change or something with the Taki Ashi candle. So there's basically two candles on the chart. But what really interests me with this is what it does when there's a downtrend, and we're in a downtrend right here. So I'm going to show you this one. So we're in a downtrend, and what these candles do, instead of Taki Ashi, where it does turn red when you're in a downtrend, but the candles, only the color really helps you with Taki Ashi. And what this does, it actually starts to set levels. So when the downtrend starts, it creates resistance levels that are above at a certain price. So we can see that at this level, I'm going to call it 43.27. This is what the Taki Ashi candle algorithm was saying is, you know, near-term resistance. And as the downtrend continues, the resistance continues to move lower. So you could use this as a trailing stop if you're kind of a directional trader. I'm using this as potential areas to sell my short strike. So when I'm selling credit spreads, and we're in a downtrend, I'm going to sell above price. So I want it to be above or somewhere near this this resistance level, because even if we retest it, there's, you know, a better chance that it's going to hold. So if I put the price back on there, we can see what this looks like together. And I know it's kind of confusing, but just think, you know, red and and it's overly simple, but red is sort of in a downtrend, and we can see, oh, let me pop this off real quick, so I want you to see this. So here, when price is above the candle, this is telling us we're in a little bit of a bullish mode. You have green with lighter colors and purple, but then when it breaks back below, it now broke below support. So this was support, 43.43, we broke support and a new downtrend started, and you can see that the previous support at 43.34 now became resistance, or it's very, very close. So it's in line with a lot of support resistance concepts you've heard in the past, where previous support becomes resistance and previous resistance becomes support. So I wanted to point that out, that we have this support level and then we ended up kind of breaking through, and now that became resistance. It broke lower, the resistance level came down. Now we did spike through it a couple times, but ultimately this resistance level held. And as the price continues to move lower, the trend intensifies, everything's red, it's pretty obvious. And then down here, you can see that the price actually got back above the Taki Ashi candles. So even though these candles were purple, let me zoom in a little bit, and purple's kind of like a potential either trend change or reversal, it never got back above the resistance level. So this purple candle is not as significant as this reddish candle, because this candle and this purple, obviously this is a big purple candle, but this got back above the Taki Ashi candles. And let me pull price off again, and we can see that now we have a new support level coming in at 42.77. And this support held for a few bars, and then we got a nice move to the upside. So that's sort of in a nutshell the price chart of the two indicators. So when you see me posting these charts over on the website, over at stockmarketoptionstrading.net, you can kind of get an idea. And you know, I don't want to overly complicate it. Red is downtrend and you're below the candles, but once you get back above the candles but you're still red, then it can be, you know, it's kind of a potential range bound mode. In this case, it actually reversed all the way. So the next thing is the Lux Oscillator, which I have the default settings out of the box. And this really works like any other oscillator. I'm not going to say there's anything super duper special about it. The one thing that I will kind of add that I think is cool, and there may be others that have this, is that it actually has these dynamic overbought and oversold. And so you can see, you know, here when the market was going up and the oscillator turned green, it actually, you can see this kind of shaded area. It's sort of shaded red. It's very light here. Let me zoom out a little bit. It's a little bit easier to see. But you can see, you know, there's extremely overbought areas that just kind of help you know that this thing is overbought and a retracement could be intact. I think the divergences work really well, which we'll look at in a minute. And you have oversold. So as the market gets oversold, it heads into this green zone. So, and I'll just kind of point out this, you know, how I use this. So at this point, and in the chart, you know, the market's kind of popped up. We have a support level, and then it pops back up, and we have a support level. But, you know, we can see, where's my, there it is. We can see, you know, price kind of making a new high, but the oscillator is not. The oscillator is not making a new high. And then you actually got this, and I want to call this a sell signal. What this is telling you that the overbought conditions are now coming out of overbought. And so these are all red flags that this thing may not move higher. You have a bearish divergence with the oscillator. So, you know, if you're thinking of getting long here, you know, and you see this momentum kind of moving lower, then you may not want to get long. Doesn't mean you want to short necessarily, but you may really want to adhere to this, you know, this level as a stop, or, you know, maybe take profits or something. Obviously, we had this huge gap down and it broke lower. I'm not going to pretend like you could have caught this drop or anything, but it does just kind of give you a warning about price and its potential momentum, you know, range bound or trend. And that's kind of how I'm using that. So let's look at another example, maybe a bearish one. So here the market was very just kind of choppy, and this is what that looks like. It's kind of oscillating between red and green, and we're above potential support, but it just can't quite get going, and ultimately everything turns back lower in this area. Everything's red. What I would kind of look for is this: once that resistance level drops on the Taki candle, that's telling you that price is moving lower. You're actually getting a break to the downside. So anyone who's just looking for breakdowns and breakouts, this is kind of in line with that as well. So this is the kind of short entry, if you will, and then you can follow price down. And as the market comes down, we can see that we actually get the bullish divergence here, where price is making a new low, but not the oscillator, and we actually have the buy signal. So this is kind of a iffy area. So doesn't mean you should necessarily go long, although we did get green here, right? We are green, but is it going to hold? Because this is still pretty bearish, and ultimately it doesn't hold. So a lot of the stuff I'm using here is really to keep me out of trading, to not overtrade, where I really want this to be a really good setup. Like this was a really good setup here. Everything was red, and we're not overbought or oversold, and we just got a nice move lower. Here it's kind of questionable. Is the trend going to continue, or are we going to reverse? In this case it continued, but it was telling you that the divergences and the color coding and getting back, that you're actually probably more of a range bound. And that's one of the things I'm seeing when you see these divergences and you get you have green on the upper part of the chart, but red down here. To me, that's a little bit more range bound. So what I would be potentially looking at contrarian wise is taking the next short, and that actually would have worked out here. So that's how I'm using Lux Algo. Again, my settings are pretty simple. I'm using the Lux Oscillator Premium with the default settings, and I'm using the candle color mode confirmation gradient and the Taki Ashi candles, and I have autopilot set, and I'm looking at short-term time frame. So that's what I got, and we'll see you in the next video.